Most authors make the same financial mistake. They write a brilliant book, spend months marketing it, see some sales coming in, and treat that money like regular income. Then April comes around and they realize they haven't set aside anything for taxes, or they have a slow month and can't cover their basic expenses, or they look at their bank account after 2 years of publishing and realize they've invested $15,000 but only made back 8. The difference between authors who build sustainable careers and authors who burn out isn't talent. It's treating writing like a business instead of an expensive hobby. The publishing industry research reveals something crucial. Authors who approach their writing as a formal business with proper financial planning and business systems earn on average 3 to 4 times more than equally talented authors who treat it casually. They structure their business correctly. They track expenses and optimize deductions. They diversify income streams. They plan for irregular cash flow. And most importantly, they make financial decisions based on data instead of hope. Today we're breaking down the business fundamentals that separate hobbyists from professionals, the financial planning strategies that create stability from irregular creative income, and the systems that turn writing talent into sustainable revenue. And if you find this analysis helpful, please hit that like button and subscribe to the channel. We analyze what actually works in publishing every single week. The first decision that impacts everything else is whether you're running a business or pursuing a hobby. The IRS has specific criteria, but the practical difference is straightforward. A hobby is something you do for enjoyment that might occasionally generate income. Business is something you operate with the intention of making a profit, using professional practices and systems. This distinction matters because it changes everything about how you track expenses, what you can deduct, how you pay taxes, and how you plan financially. Authors operating as businesses can deduct their home office, their conference travel, their professional development, their marketing expenses. Authors treating writing as a hobby face severe limitations on deductions and miss opportunities for tax optimization. The business structure question comes next. Most authors start as sole proprietors because it's simple and requires no formal setup. You're just operating under your own name or a DBA. But as income grows, many authors benefit from forming an LLC or corporation. An LLC provides liability protection and can offer tax advantages depending on your situation. It separates your personal assets from your business activities. The crossover point where an LLC makes sense varies, but many tax professionals recommend considering it once your author income exceeds $15,000 to $20,000 annually. Here's what this looks like in practice. A romance author published Indie for 3 years as a sole proprietor. Her income grew from $8,000 the first year to $45,000 the third year. She formed an LLC, elected S-corporation tax treatment, and immediately saved $6,000 in self-employment taxes while gaining liability protection. Her accountant helped her set up a reasonable salary and distribution structure that optimized her tax situation legally. The business fundamentals that matter most are the systems you build. Successful author businesses track every expense in real time, not just at tax season. They maintain separate business banking and credit cards. They use accounting software instead of spreadsheets. They create invoices for speaking gigs and freelance work. They maintain professional contracts for every business relationship. These aren't optional nice-to-haves. They're the foundation of treating your writing like the business it needs to be. Book sales alone create an incredibly unstable income pattern. You might earn $3,000 in a launch month, then $600 the next month, then $1,200. Traditional publishing adds even more unpredictability with advances paid over 18 months and royalties twice yearly. Building a sustainable author business requires diversifying beyond book sales into revenue streams with different timing and stability characteristics. The data on successful author businesses reveals a pattern. Authors earning 6 figures or more from their writing typically have 4 to 7 different income streams. Book sales form the foundation, but they layer in speaking engagements, teaching workshops, freelance writing, consulting services, and licensing deals. Each stream has different cash flow timing, which creates overall stability. Here's a real example of how this works. A nonfiction author in the productivity space built her business methodically. Year 1, she focused entirely on her first book and made $18,000. Year 2, she added corporate speaking and workshops, bringing total revenue to $52,000. Year 3, she developed an online course and a licensing deal with a training company, reaching $98,000 in revenue. Year 4, she crossed 6 figures with a combination of book sales, speaking fees, course sales, and consulting. Each income stream smoothed out the volatility of the others. The cash flow management strategy that works best for irregular creative income is building what financial planners call a profit cushion. This isn't your emergency fund. It's operating capital that smooths out the peaks and valleys of author income. Successful authors aim to keep 3 to 6 months of business and personal expenses in this cushion. During high-income months, excess revenue goes into the cushion. During slow months, they draw from it without panic. Tax planning becomes critical with irregular income. The authors who succeed set aside a specific percentage of every payment immediately. Many use separate savings accounts with names like tax savings and estimate 30 to 35% for federal and state taxes plus self-employment tax. They make quarterly estimated tax payments to avoid penalties, and they work with tax professionals who understand creative business income patterns. This is another area where smart business systems create advantages. Authors using tools that track income sources can analyze which activities generate the best return on time invested. One author tracked her income meticulously and discovered that her corporate workshops generated 3 times the hourly rate of her freelance writing. Even though she enjoyed the writing more, she shifted her time allocation accordingly and increased her annual income by 40% while working fewer hours. Quick pause. I need 20 seconds of your time. I wouldn't interrupt if this wasn't worth it. You printed a QR code linking to your sales page, but is it the right page? You have no way to test. With Mins, you swap the destination anytime. Try a different landing page, see what converts, and keep the one that works. No reprinting needed. Links in the description, www.mins.at. All right, where were we? The financial planning mistake most authors make is thinking only about their current book or current year. Successful author businesses plan in 3 to 5 year horizons with specific financial milestones and retirement strategies appropriate for creative professionals. The emergency fund remains foundational. Financial advisors typically recommend 3 to 6 months of expenses for salaried employees. For authors with a regular income, the recommendation increases to 6 to 12 months. This seems daunting, but building it systematically makes it achievable. One author automated $250 monthly to her emergency fund and reached a 6-month cushion in just under 3 years. Retirement planning for authors requires different thinking than traditional employment. You don't have an employer match or automatic 401k contributions, but you have access to powerful retirement vehicles designed for self-employed individuals. A solo 401k allows you to contribute up to $66,000 annually as both employer and employee. A SEP IRA offers simpler administration with contribution limits around 25% of net income. These aren't just retirement savings. They're current year tax deductions that reduce your taxable income substantially. Here's where the numbers get interesting. An author earning $70,000 in profit who contributes $15,000 to a solo 401k reduces her taxable income to $55,000. At a 30% combined tax rate, that retirement contribution saves her $4,500 in taxes while building long-term wealth. The retirement contribution effectively costs her only $10,500 after tax savings. The investment strategy that makes sense for authors balances growth with stability. Because creative income fluctuates, having some portion of investments in stable, accessible accounts provides flexibility. Many financial planners recommend a 3-bucket approach. Bucket 1 holds your emergency fund in high-yield savings. Bucket 2 holds intermediate savings in conservative investments for goals 3 to 7 years out. Bucket 3 holds retirement money in growth-oriented investments for the long term. Professional development investment deserves specific financial planning. The authors building sustainable careers allocate 5 to 10% of revenue to professional growth. Conferences, courses, coaching, software tools, professional editing, cover design. These aren't expenses to minimize. They're investments that compound. One author tracked her professional development spending over 5 years and calculated that every dollar invested in learning and tools generated approximately $7 in increased revenue. The difference between writing as an expensive hobby and writing as a sustainable business comes down to systems, planning, and professional practices applied consistently over time. Talent matters, but business fundamentals determine who builds careers. Here's your action plan. First, formalize your business structure with separate banking, proper expense tracking, and consideration of LLC formation if your income supports it. Second, build your financial cushion systematically by setting aside tax money immediately and growing your operating capital to 3 to 6 months. Third, diversify your income beyond book sales into complementary streams that provide stability and leverage your expertise. If you found this analysis helpful, please hit that like button and subscribe to the channel. We analyze what actually works in publishing every single week with data-driven insights you can implement immediately. Drop a comment below. What's your biggest financial challenge as an author? Is it irregular income, tax planning, or building long-term stability? And if you want these strategies delivered straight to your inbox every week, subscribe to our newsletter. The sign-up link is in the description. And if you're serious about building professional author business systems, check out Mins. Create dynamic QR codes for your professional materials, promotional campaigns, and business development that update automatically as your business grows. Track which business activities drive the most engagement with built-in analytics. Build systems once that serve your business for years. Head to mins.at to get started. The authors who treat their writing like a business, with proper planning and professional systems, are the ones building careers that last decades instead of burning out after a few years. Make your talent sustainable.